Hello, Nasdaq followers, and welcome to another edition of Nasdaq Spotlight. I'm your producer and host, Leanna Alfaro. And in honor of Financial Literacy Month today, we have crossed the tax season. We have received our tax refund. So talking to us a little bit more about it is CEO and founder of My Money, My Future, Ramona Ortega. Thank you so much for joining us.
Yes, absolutely. So excited to be here with you.
So I would love to talk about this figure right here.
Absolutely.
Tax refunds are up in 2019, a little over 3,100. What might people not know about it?
Well, you shouldn't be loaning the government money is essentially what you're doing when you're getting a tax refund. And so I think that's something people get excited that they're getting a refund, and that's a big chunk of change for a lot of Americans. But what you're essentially doing is loaning the government money. So oftentimes it's better to figure out your tax bracket beforehand so that you're either getting a very small return or maybe even you might just come even at the end of the year, because you could be using this money in better ways to make money during the year.
Absolutely, and that's something that Ramona thinks a lot about because
I
you also run your own business.
I do, in fact.
So let's go ahead and take a look at the tax brackets, right?
Absolutely.
So we can move along to the next slide here. Tell us a little bit more about how you can determine your tax bracket and how much you'll get back.
Sure. This is probably one of the most complicated things I think that people don't think about in terms of their taxes. We have a progressive tax system, which means you're taxed at different income brackets. So, for example, if you make $0 to $9,525, you will get tax 10% of that income. If you are, and I would say that most people are, especially young professionals, are in this sort of third tax bracket. So that means that your tax bill is $4,453 plus 22% of anything above the 38,701, right? So what you want to do is, if you're in between these tax brackets, you want to think about how do you sort of put money away in a tax deferred account or your HSA to get maybe below the 38,701 or keep below sort of the 82,500 here, because you don't want to go into this bracket because then you're looking at 24% and that's quite a big jump between these two. So you can go and there's plenty of calculators online and you can figure this out during the year. And when you look at your pay stub, you can see how much you've already paid in taxes. And if you've overpaid or you're getting close, you might want to think about making some adjustments during the year.
Perfect. So that's a good tip about watching if you're straddling this threshold right here, because you jump from 22 to 24% of tax owed. And this is a good resource that you brought up, Ramona. This chart is from NerdWallet. So if you want to find out a little bit more about what this chart looks like in full, go ahead and head on over to NerdWallet. So moving right along, we're talking about how to reduce your tax bill. And you had some pretty useful tips here. Tell us a little bit more about it, and I definitely want to talk about HSAs. So once we get there, we'll elaborate a little more on that.
So, and this is, these are like sort of I would say the four most important things to think about, particularly during this time of the year. So when you talk about maxing out your 401k, if you are employed and have a 401k available to you, you want to sort of bump that up, especially if you can get a match from your employer. So you don't want to lose that money during the year. So talk to your employer, ask your HR whether or not you have a match, and if you are sort of below that threshold, make sure you're putting a little bit more money into that 401k. That will reduce your tax bill at the end of the year. Invest in an IRA. I'm a big Roth fan, especially for young people who are just getting started. You can invest up to $5,500. Generally, there's a couple of rules around that, but that's a nice number to think about and kind of an emergency savings or planning for the future. HSAs are, if you are employed again, and you're not part of the sort of side hustle or gig economy, the HSAs are a great way to save for things like glasses or medical bills or medical supplies, for example. There's actually an online store where you can go and it'll tell you all of the items that you can purchase with your HSA or an FSA.
Perfect. So let's pause really quickly on HSA, because I think this is so interesting, and a lot of people don't know that you can go to a specific store where you spend this money that you put in this kind of like deposit storage area, and you can buy a lot of medicines. So
absolutely good. Basic things like aspirin, toiletries. There's all kinds of things that are considered under the HSA.
I think you compared it to a duty-free store. And
yes, exactly. It is much like a duty-free store.
Be smart and tuck away some money for your health and for just daily needs that you might have.
Absolutely.
And speaking of side hustles.
Side hustles, yes. I mean, what is it? 44%, I believe, of all millennials have a side hustle. And if you are getting more than $600 generally from a side gig, or someone paid you to do something, whether that's social media or you're a photographer on the side, and they're paying you, you're going to get a tax document, and you have to report that income. The good thing about reporting that income is you always also get deductions, right? And so with your Schedule C, you can deduct things like your computer, or did you travel for a trip for this job, for example? Are you paying subscriptions to support this business? Those are the things that you want to think about, and it'll reduce your tax bill. So it's always a great idea to take advantage of that.
Now let's talk to a very popular point right now. It's spring. You know,
Yes.
we just came out of spring break. It's time to do some spring cleaning, some
Yes.
purging. Marie Kondo, your finances. I love this.
Yes.
Love it so
So
much.
I recently Marie Kondoed my closet, and I thought about this idea around how do you Marie Kondo your finances? Because especially during tax season, it is such an important time. You're already collecting all of your documents. You're already sort of reviewing your financials. So it's a good time. You're kind of in that space, in that headspace. It doesn't feel as overwhelming to really think about all the things that you need to be thinking about throughout the year. So it's kind of a financial 180, right? And so this is a time when it's a really good place to pull your credit report. Every year you get a free credit report, and so that's something that you want to remember to pull down. Look at your credit score, and it's a good way to say, okay, next year I want to be at this credit score. I want to increase it by 10 to 15 points, especially if you're going to buy any large purchases like a house or a car. You also want to start looking at your net worth. I know we don't think about that much, and we always think about salary, but net worth is actually a super important number for you to understand sort of how much you have left over if you paid off all of your bills. What are you worth? Where are your assets, and what are you spending on? You also want to look at a review of your accounts. Where are you spending? And this comes down to budgeting, right? Are you paying for subscriptions that you don't use, right? I was just looking at my Amazon Prime account. I was like, wait, do I really use this?
Yep, I hear a lot of people, they have the Amazon, they have the Hulu, and they have the Netflix, and they're like, all right, which one's getting cut?
Exactly. Or the gym membership that you might not be using, right? So this is a good time to look at that. Also, think about your budget. We have a very simple platform where you can put in your monthly income, and it'll give you sort of your budget broken out into 3 buckets. It's the 50-30-20 plan. Very simple. Go to our website. You can check that out. And there's tons of tools now to do this. So you really want to make sure you're spending where your priorities are. It shouldn't be about deprivation. You should feel good about spending your money. You've earned it, but you should know where you're spending it.
There's just so many interesting studies around that.
Yes.
That deprivation is really not a good way to go on a diet or a financial savings plan. It's more about making sure you allot that money to make sure you have fun and you have that kind of space.
And you feel good about it, because then it doesn't feel like you're like, oh no, I'm dipping into this. You're feeling good about putting that money away. Insurance, I think it's one of those things that a lot of young people, especially in their 20s and 30s, don't think about. But life insurance is a really great way to start building your legacy, right? Sort of how are you planning for the future, whether that, do you have parents to take care of, or you have other siblings or other family members, or you have children. I'm a single mom. One of the first things I did was buy a really nice life insurance to make sure that my son is protected. Even renter's insurance. You live in New York City, you want to make sure that you're protecting all of those assets that you have inside of your apartment. And these days you have really good insurance opportunities online. So they've reduced the price. It's not as expensive as you think.
Absolutely. And so now you mentioned talking about doing a financial 180 to make sure that you look at ways you can improve the way you manage your money. So if we move along to the next slide here, let's look at these 3 ways that you've suggested.
That's right. And by the way, I want to say that these 3 things are also really important in terms of what you can do with your money during the year instead of lending it to the government by getting a refund. It's almost the same exact types of things. One is you want to contribute to a high yield savings account. And the good thing about interest rates where they are right now, there's quite a few high yield interest savings accounts out there. And so take a look at those. And we're talking about 2.2%. And so at least you're making some money off of your savings when you put that money away. And I think right now, like less than half of Americans have a emergency savings with $1,000 or more. So this is a really important point in terms of having a financial foundation. Invest in a Roth IRA. Again, because this is not tied to employment, which means if you don't have a job or full-time job, or you don't have availability with a 401k at your job, this is a great way to open up a Roth IRA. Is available to anyone over the age of 18. And now there's so many options online with robo-advisors that this is a really good opportunity to start. Pay away high interest debt and loans. Credit card debt is at an all-time high right now. I mean, we're talking about interest rates are anywhere but from 15 to 25%, sometimes even higher. That's the kind of debt you want to pay down. I know a lot of people are concerned with student debt, but oftentimes student debt has a lower interest rate, which is why we're not saying right here that you should pay down your student debt, unless it's a very small debt. So maybe $1,500, $2,500, if you can just pay that off, awesome. But otherwise, you really want to focus on the debt that has those high interest rates.
Perfect. So we want to make sure we do an evaluation of all our credit cards here.
Yes, and know what your interest rates are on your credit cards. Yep, absolutely.
So Ramona, thank you so much for joining us. And yes. I know that My Money, My Future also has a ton of resources. So where can people go to check that out?
Yes, so www.mymoneymyfuture.co. You can sign up for our free account and get free financial guidance and education on many of the issues we talked about today. You can also follow us on IG and on Twitter.
Perfect, and you definitely have my follow. Ramona, thank you again so much for joining us and talking to us about doing that financial 180 post-tax season.
Absolutely.
Have you back soon.
Thank you.
Nasdaq followers, please stay tuned for more coverage.